Welcome to the NCR Connect podcast, episode 2. I'm Owen Wild, and I'm part of the industry marketing team here at NCR Banking. NCR Connect podcasts are where we address key issues and trends that affect financial institutions around the globe. If you missed our introduction to the series, please check out episode 1. And in this episode, you'll hear all about the scope and the mission of this podcast. Over the course of the series, we'll be covering a full range of topics. And as we said in episode 1, we want your input and feedback as to topics or comments on our content. We set up a very easy way for you to get in touch with us. Just email us at connect@ncr.com. So on today's episode, we're going to talk about the role of the branch in a digital first world and how financial institutions can plan for the future. So to discuss this with me today, I'm joined by my colleague and, for some added pressure, my boss, Andy Aceto. Andy leads the product marketing group within NCR Banking, and in his role, he is engaged nearly on a daily, if not hourly basis with our customers, talking to them and listening and hearing from them about their strategies and priorities. So first, Andy, thanks very much for taking the time to join me today.
Yep. Thanks, Owen. It's great to be here.
Let's just jump right in because there's a lot to cover here. So let's get some context. Can you give a little bit of an overview about what's going on with branches at the global basis? Are there more? Are there less? What's the trend? What's going on with them?
Yeah, so a great place to start. Globally, you can assume there's about 1 million branches, and this number covers banks and credit unions and building societies and the different forms of financial institutions around the world. That number's been relatively level. The data comes from a study that's done every 3 years, and that number of roughly a million branches has been pretty level. There's a slight decline in the more mature markets. So think of North America, Western Europe, South Pacific, et cetera. And then that gets countered by growth in the number of branches in the emerging markets. And certainly over the past several years with the pandemic, that's disrupted consumer and business use of any brick and mortar. So people going to branches, both customers, consumer customers, as well as business. And for an extended period of time, branches were actually less accessible. Any brick and mortar was. And so there was far less traffic and transactions going to the branch. But the data that's coming from the industry analysts, the people that track the industry for financial institutions, tells us that traffic seems to be returning to the branch. There was a recent report that was done by the analyst Salent that found that about 3/4 of financial institutions have seen branch traffic return to 80% or more of the pre-pandemic rates. But even though we see consumers coming back to the branch, Owen, I think it's clear that there is common agreement and data to show that consumer patterns have changed, that the flow of consumers to the branch to do transactions has shifted to digital channels. And a branch that you would have built 4 or 5 years ago is probably quite different than the branch that most institutions would look at building today to accommodate these current and future trends.
Yeah, but Andy, as you know, our inboxes are filled on a day-to-day basis. The rumors of the branch demise are happening. We're hearing it imminent. But in our conversations and your engagement with our customers and with banks, that doesn't seem to be the case. So, talk a little bit about what you're hearing about why the branch remains relevant to banks.
So I think we'd all acknowledge consumers have shifted. By the way, consumers and businesses have shifted to digital channels for a majority of interactions across all industries. Let's not just look at banking, right? Let's think about our own personal lives and the amount of interactions we now have or do with businesses every day using our phone, using online versus going to that location. But what we're seeing in banking is even as consumers and businesses have shifted to using digital channels, the financial institutions we work with, the branch still plays a very core role in the strategy. I mean, think about it. For starters, for most banks, on a global basis, the majority of new relationships and accounts start in the branch. It differs by market. We'll hear numbers of 60% or more of new accounts, for example, are from the branch. Some markets that can be as high as 80%. And it's clear that consumers and businesses still value that face-to-face interaction with a skilled banker, especially when it's a more important, more complex transaction. And you find some trends with those accounts in the branches. You find that when an account is opened in the branch, after 90 days, it'll have a higher starting balance, sometimes as much as 4 or 5 times the balance of an account that may have been opened digitally. There's more cross sell. The banks have very skilled people in those branches, and they're very good at working with the customer to ensure that they fill the full need. So we'll see that on average, when an account is opened in a branch, about 4 of 10 times, 40% of the time, they'll buy another product, two or more products, versus maybe 1 in 10 when they open it online. And then, lastly, in terms of just the account openings, there's the opportunity to create a relationship that will be lasting. In other words, you're looking to create a beacon in the markets you serve. A brand beacon is a term that's sometimes used. um, you want to make sure that there is a billboard for your financial institution that says you are an active participant in the communities that you serve. And I'll mention a final thing, Owen, which is you have to be careful that you get what you asked for. Some think they want to have digital only customers. The challenge with a digital only customer is typically that's a value shopper. I mean, think of yourself again. If I go to a business and buy something online, um, typically it's because it's a better price. There's something in it that is a value add, but I'm not creating a relationship with that
Mm,
business. And most of the banks, they're looking to create a lifetime relationship with that
mhm.
customer. So
Yeah, so it sounds like for the ones that are really putting some thought in it, it's part of a holistic view of their channels, their customers, and their segments.
that's right.
So,
I mean,
yeah,
by the way, Owen, I'll mention one other thing. You'll
sure.
you'll often find those digital only financial institutions are quite narrow.
Hmm.
They're offering business loans, or they're offering a credit card, or they've got a money market, a demand deposit account that pays a very high interest rate for the consumer if they put their money in it. What you don't find is they are a full relationship bank, right? They can cover all of the needs that you have across the spectrum of things that you'll do across a lifetime. Those digital only banks, at least for now, seem to be very narrow.
So in those banks taking the holistic view, this usually gets rolled up under the concept and the conversation around branch transformation. Big buzz phrase, and hey, we're
Yeah,
going to many shows that are going to be featuring that over the next coming
that's
months.
right.
So what are the industries seeking to do? What are we hearing is the key objective as part of a branch transformation strategy?
Yeah, it's one of the most important points in the whole dialogue, which is what are you really trying to accomplish? It's interesting if you go back to that term transformation and you look in the dictionaries, you'll typically see something about transformation being changing the form or the function or the appearance of something, right? The synonyms are alter or convert or remodel or revamp. And if you think about it, when it comes to a branch, you can kind of only do four things. You can open a branch, you can close a branch, you can remodel a branch, or you can relocate a branch. That's if you're going to transform, you're going to do one of those things. And anytime in an industry, actually even personally, anytime we transform, we change, it's got to be driven by something, a problem or an opportunity. And what we hear from the banks are branch transformation is founded on both. The one side of it, it's opportunity. We need to grow. There's pressure to profitably grow, whether it's new markets, whether it's new products, whether it's reach within your existing markets. We got to drive growth. Um, One of the Solent studies showed that was actually the number one driver of branch transformation. It wasn't, cost or some other factor. It was growth. The other kinds of things you see the banks and credit unions talking about is just the labor shortage that's hit everybody. I mean, that's in every industry, not just in banking. And the need to lower the cost and deal with unprofitable branches, find a way to change the format so that it's profitable, and then just the competitive pressures. Um, and we'll typically hear a couple of themes. Just to sort of riff on this, we'll hear a couple of themes. It's really important to have those true north themes down, because ultimately you're going to have to make decisions.
Hmm.
And as you make those decisions, they're hard sometimes. And when you have a hard decision, what we would normally find is if you go back to your true north principles, the decision gets easier. If you really think about what you're trying to do. Um, what are the banks really trying to do? They're trying to grow revenue and reduce costs. They're trying to find a way in the branch to have the staff that's in the branch primarily focused on relationship and advisory and sales. And the way one of the banks had it said it was, we want to have more skilled bankers and fewer staff in the branch that are transactional in their role.
Hmm.
Um, I mean, you hear the term universal banker. People may not call them tellers anymore, but at the end of the day, don't think of the name on the badge. Just think of what they're doing. Are they helping the customer do transactions or account services, or are they assisting the customer in in an advisory capacity and providing solutions to their complex financial problems?
Bringing more added value to the engagement.
Absolutely.
Yeah.
I think that's probably, I would say that's a key way to think about it is how can I have the people in the branch adding value versus
Hmm.
just being a transactional?
Sure.
The branch is typically, well, people and property are typically two-thirds of a branch's of a bank's non-interest expenses. So what the banks and credit unions want to do is find a way where when they put a dollar on the table for people or for property, that dollar or pound or euro or yen or whatever the currency is, that investment is focused on creating value versus just delivering routine transactions. That kind of sits at the core of another one of those true north principles, which is you want to automate everything you can from transactions, whether you shift it to mobile or online or the call center or perhaps an ATM or these ATMs that have video, remote assist, anywhere but in the branch with that most expensive resource. A couple other closing, and then we can move on. But a couple other closing true north principles. One would be um, the branch of the future is typically smaller. I mean, all things being equal, right? I'm not going to have as much space. It's going to be more digitized. Um, and I want to make sure as I transform the branch that I don't leave my business customers behind. It's actually one of the most important elements. A lot of this branch transformation stuff is great for the consumer. Oh, I can get money from the ATM, or I can do this with my phone, or do this at the contact center. But your business customers have a different set of requirements, right? Strapped cash and rolled coin, large deposits, those kinds of things. So as you transform the branch, you want to always be considering the needs of that business customer. And maybe I'll close with two quick points on this. It's not about having fewer formats; it's about more formats. Um, branch transformation is about every branch is a formula. You've got a cost and an opportunity, and you want to balance those two. And branch transformation is about having more flexibility with the cost, so that you can be more um, creative with the opportunity. You can put branches you normally wouldn't be able to, always with the idea of doing it in a way that creates value for the customer, right? How they do things, when they do things, where they do things. Yeah.
Yeah, I mean, it's really a wide space. And I think what's really come across in the engagements we all have is that it's not change just for the sake of change. It's change that's aligned to achieving an objective or a strategic outcome that they're looking for. And finding that mix of where human involvement, technology, and process changes all come into mix to really expand those experiences and create a more unique opportunity for the customers and bring new services to the customers.
So think of it, Owen. Think of it this way: the best transformation is not just about form; it's about function. If
I
all you
like it.
do is change from blue to red and have carpets instead of hard
Yeah.
floors and some better lighting with some artwork, right? You change the form, but you fundamentally don't change the function and how the branch, uh, um, process happens.
Yeah.
It's just cosmetic. You really need to look at the function, not just the form. Yeah.
Yeah. So in our role and our experience with customers around the world, and we've been working with them on these branch transformations for, ever, I guess, even
Mhm.
from the first time an ATM was put in place. We've learned some do's and don'ts, and we've seen some practices that have been successful and some things that they come back and said they would do differently in the future. Can you kind of give a summary of what we've picked up in our learnings?
Yeah, I'd start with maybe the cornerstone, which is using technology to transform the branch is not a technology strategy; it's a business strategy. Um, the technology enables it, no question. But I think of when we get customers into our briefing center, if the only folks coming in to talk about branch transformation are technology people, I'm quite anxious,
Yeah.
because you have to have the business buy-in. It's a little bit like CRM, customer relationship management. It is a technology, but if the business doesn't buy into segmenting your customers better and using data, it won't be successful. Branch
True.
transformation is no different. You have to have the right people at the table. And by the way, that doesn't just include the people within your financial institution. Many will work with um, design build firms and consultants and folks that do their architecture,
Hmm.
et cetera. That's
Hmm.
a really important part of the equation because you need to design the technology into a branch in a way where there's a clear value prop for the customer. Um, I'll give a simple example. You can design a branch to put technology in an area where not only is it accessible during branch hours but after hours. So I mean, it's self-service technology or it's maybe using remote assist. So I could put it in a place where it's available both during and after branch hours, or I could put it in the branch. But the moment you put it in the branch, it's only accessible when the branch is open. Right. Be
Hmm.
like at the end of the day when you close the branch, don't forget to turn all the ATMs off. Well, you'd never do that because your customers find convenience in access both during and after hours. Um, I think a couple other quick things to think about when you're looking at designing a branch that will use technology to do more. Um, Probably the number one is privacy.
Yeah.
Um, I've seen architectures where the technology is in the vestibule or it's 15 inches to the right of where you walk in or something like that. It just doesn't feel private. And if it doesn't feel private and secure, your customers won't use it. You'll be frustrated with the return on your investment. And the other I'd mention is a long list, but the only other one I'd probably bring up here is make sure that the people in the staff enthusiastically endorse this. They're champions for the change versus feeling that it's competing for their job. I think of one of the major retailers that moved to self checkout, and they actually did not reduce the headcount in the store. What they did was shift people from being there after you were done buying, right at the checkout line, to putting them in the store where they could assist you while you
Right.
were buying. So do it yourself store, um, home improvement store. That's the role you want. People are. It's not always about having fewer people in the branch. It could be about shifting the role they play to be more
Yeah.
advisory and sales.
I mean, when you look around and just interact with banks in the real world, I think one of the exciting outcomes has been the differentiation that now exists. Maybe 20, maybe even 10 years, a bank branch looked very much the same regardless of whose branch it was, and how banks have been able to bring in their brand and bring in their strategy for how they want to engage to not only change the form factor but how interactions with technology and interactions with staffs have played a part in this ability for them to differentiate as
Yep,
well.
that's right. Yep.
Yeah. So going back a little bit, so when we talk about the traditional model, we're starting to see that self-service is really being. You can kind of put it into some key categories that it's playing a role in the transaction today. So can you talk a little bit about how self-service is seen in the traditional model?
Yeah, I think I have a simple model that I use for me for thinking about what am I gonna do with self service in this branch as I move forward. And I think of a primary objective. I mean, I want to automate these everyday banking transactions, and if it's something that you can do on your phone or online or some other method, do it. Don't have them do it at the branch. Have them. You can offer it, but ideally they'll take advantage of the more convenient channel of digital. But there's some things that you can't do with your phone or by calling the call center or going online. Think of withdrawing a large amount of cash that's over the
Yeah.
normal limit, or I need a replacement credit card, or which I could do digitally, but maybe I'm actually looking to have it printed today, or I want to make a payment using cash for same day credit because my bill is due, my credit
Sure.
card loan, etc. So I think of two buckets of transactions: those that require a banker because of the business rules, or ones where the customer simply wants to request assistance. So it's either required because of the business rules or it's requested by the customer. Those are the ones that we want to be thinking about automating in the branch. And ideally, we're finding ones that traditionally could only be done by a banker in the branch. So if I can find a way to do that self-service at an ATM or
Mhm.
using remote assist, that's really what I'm looking for. I'm trying to find a way to reduce the traffic that goes in the branch just to do an everyday banking transaction. That's the way I think about it.
Yeah. So, I mean, if you really take a step back, this concept of branch transformation, I mean, I would say I wouldn't consider it to be a new concept. I think we can kind of look at our interactions and see that banks have been transforming every step of the way. Can you put it kind of into sort of categories of how the transformation has evolved?
Yeah, I think of it. You're right. Since the first branch was built, they've been transforming, right? Hundreds of years ago, I guess. Um, I think of three primary generations of branches. The view that every branch should be the same, offer every service, be fully enabled to meet every need of every customer that would ever walk in the door. That was kind of the 1990s, and every industry was doing that. Restaurants were doing it, retailers were doing it, and then into the 2000s, you get to hub and spoke. We'll have different sizes. We'll have flagship and express and neighborhood and community branches, big, medium, small. And what we're seeing now is a an evolution beyond that. The banks are and credit unions are optimizing their existing hub and spoke. They're not getting rid of it. It's all good, but as they build new locations, they're much more purposeful in designing the location. It's more about meeting a specific customer segment. So
Mm,
think about a medical center, or think about a university or college or higher education location, or a business park, or maybe it's a condo in a city where there's a part of town that is revitalizing, and expensive condos are going in. You could never build a traditional
mhm.
branch. Um, those are the types of things. We're even seeing mobile branches pop up. And locations where there is no branch, but there's the ability to work with a remote banker. We have a customer in a medical center that got a room, and they put in a computer, an iMac, where you can sit down and
Hmm.
see the remote banker that's somewhere else and open an account, add to your existing account. And they also have an ATM that provides that same remote access to a banker if the business rules require it or you want it. So they've built a branch. There's just no people in the branch, but you can get live assistance for doing things. That's kind of what we're seeing. That purpose-built branch becomes the
Yeah.
key to expansion.
Kind of a combination of specialization and almost flexibility where they can kind of move factors into place whenever the situation may call for it, whether it's festivals and street fairs or disaster recovery with mobile locations, as we've seen through natural occurrences, things like that.
Yeah, it's that, the word I think of is agility. We want to have
Yeah,
agility in our
that's a good.
branch formats to better match the opportunity with the cost to serve. And what these technologies give you is agility that frankly can create competitive advantage.
Yeah, that's great. So again, in your conversations, and fortunately, we have great customers who really trust us and share, kind of want to work, share with us their visions for their future. And obviously, we not to ask you to disclose anything that we can't talk about, but if you kind of put your crystal ball mode on and kind of looking forward about closing comments on where this goes next, what does the future look like for branches?
Yeah, I'd net out the key points we've been talking about. Um, the financial institutions we talk with view the branch as remaining an essential part of the strategy, but that location that they would have built in the past is not fit for future. They're shifting. They want that location to focus on sales and advisory and the staff there. They want to digitize more of the transaction set. They want to be more targeted in the format so that it's merchandised to serve a specific customer segment.
Hmm.
And moving forward, technology will be that enabler that lets these financial institutions be more precise in matching that cost of the branch to the opportunity. And in so doing, by the way, actually potentially increase the number of touch points that serve their customers and prospects rather than have fewer. Branch transformation is about not thinking of it as necessarily a branch, but it's a touch point. And
Yeah.
ideally, we can increase the number of touch points to create more customer convenience and obviously create competitive advantage.
That's a really strong point, Andy, to kind of dismount and tie up this conversation. Yeah, so maybe different, but there may be more ways for consumers to actually interface with their banks going forward in different ways. That's a really strong message that this thing brings. Hey, Andy, thank you for providing an overview on this topic, and even more so than that. And you and I both can probably go on for hours just on this one topic. It's truly an exciting space and really offers amazing opportunities for financial institutions to reinvent, transform their business, and create really new experiences for customers. And over the course of this series, we're going to bring additional episodes that will go into more details on the topic of which Andy outlined and identified. So, Andy, thanks very much for getting this conversation started.
Thanks for having me on.
No problem. So again, this will wrap up episode 2. So if you have any additional questions about NCR's branch transformation, our thoughts and solutions for this space and others, as well as I said earlier, ideas or thoughts for future Connect podcasts, our easy way to reach us is email at connect@ncr.com. Want to take the time to thank you for taking time out of your day for listening today, and we look forward to bringing you the next episode of NCR Connect.